Hello everyone and welcome to the fundamentals portion of the newsletter for August 2nd. This is a really good chart. I am fairly high conviction that we are now in what we can call the next bull market. I think there's very little reason to believe otherwise. I think we've now seen an explosive move in both Bitcoin and Ethereum, the two major caps. I think this is really starting off something that's probably got some legs to it. Now, with all of these bull markets, there's most definitely going to be some savage pullbacks, and I really do think with the number of trading instruments that are available for everyone in the market now, derivatives and things like that, there's going to be so many swing trades and other opportunities, but there is very little right now that is telling me that this is anything but the start of a bull market. And the explosive maneuver of this particular set of candles in a matter of days, we've now entered what is really approaching a price discovery phase. What we really have is on a monthly basis, this particular close is extraordinarily bullish. We've now got, I believe that the close of this particular candle was up around 11,500, and that is on a monthly basis the second highest close of all time, with the only exception being the final run up back in December 17. So I think if you were to, where my current position is and where my thinking is this is the magic lines chart. So these are kind of the historical support levels in bull markets and resistance levels in bears, and you can see that price has aptly decided to just leave them all behind and bid them farewell. So I think we're now moving into a phase where we should, if we see a nice little consolidation coming off this candle, something similar to what we've seen here, this is very promising, and I think we could be in stair-stepping mode from this point onwards. I have seen a number of analysts that have been talking about the pullbacks that Bitcoin tends to throw people through. Most often there's a pullback somewhere on the order of about a 30% move, somewhere in this early bull market to try and shake everybody out. And to be honest, when you look at the scale of this move, it wouldn't surprise me. We're sitting up here at about 11.8 as of the close on the first. So this hasn't picked up today's candle, but it will pick up tomorrow. My estimate is that we will probably test this level up around 14k, and there'll be one of two different scenarios. I think we'll either have a complete nuke through like we saw, because everybody tries to short it and we get a long squeeze like we saw in April 2019, or it will actually be that gut check where we get a consolidation phase and then a nice pullback, and whether the 128 day 100 or 200 day have curled up enough by that point in time, they could very well be our support levels. So what I'll be looking to do in the very near term is start looking at pulling together a kind of a crash course on buying the dip levels for specifically focused on Bitcoin. The magic lines are obviously really the first port of call, and as we move into this bull market, the 128 day and the 200 day moving averages should be your go-to keep an eye on levels. So if in doubt, follow those levels. As we move into a very strong, and we start getting into the euphoric phase of this market, the 200 day is unlikely to be revisited, and that's when the 128 really takes over. But in this early phase bull market, I think the 200 day is going to be a point to be watching. So I think the core to take away from this chart, these are our historical moving averages. We are now well and truly up and above them. We've got the second highest monthly close since the all-time high, and we are now in a phase where we are approaching a price discovery. I think once we get above these peaks, which I think when you consider the wicks, this will only capture the closes, this chart, but once you consider the wicks, I think we're up about 14k. So once we get up above 12.8 or 14k, that's when we start to move into true price discovery. And I think there's going to be some gut checks between now and then, but my gut feeling is that there is now a lot of signals saying that we have now entered the bull market and we've finally broken the back of the bear. So if that doesn't excite you, I don't know what will. From a mining perspective, so coming at this from a post-halving view, we're now breaking up above, and you can see the difficulty price in this dark blue line, and we've got the difficulty ribbon up above. Let's zoom into a few of these and just get a bit of an overall look at what's going on. So from a difficulty squeeze perspective, you can see that we've basically had our squeeze through the bear market, particularly through the capitulation period. We had our initial rally up. Now, a lot of this hash increase was hardware improvements rather than more miners coming on. There would have been some miners coming on and expansions and things like that, but most definitely there was an upgrade of a lot of the hardware that occurred. And a lot of miners really invest the time to build up their new ASIC hardware now, now back then. They build it up early, anticipating the bull market was approaching, and then they wait for the halving to really test their setup before they go through any more expansion. So what I would suspect to see, and it's going to be very interesting because there's obviously a lot of floodwaters coming through China at the moment, and that has twofold effects. China I still think represents 65 to 70% of the hash power. Now those floods both create hydroelectric power, which is cheap, so we could see boosting of hash power as a result of that. Cheap energy allows people to expand more, but we could also see some hash facilities actually be inundated with water. So there's kind of two sides to that. But my gut feeling is that we will probably see hash power oscillate sideways from here. It may not necessarily improve because they're not seeing the coronavirus is also going to impact the supply chain for ASIC hardware. And what that will do is that will actually put miners in an increased profit. So if price decides to keep moving because of the scarcity element, those miners will be more capable of actually hodling onto more and more coins, and that will actually constrain supply further. So from a mining perspective, I think that this is very positive for price action. You can see that we're starting to break above the difficulty estimate line. This is just the regression line. So we're now venturing beyond the fair pricing model and kind of going into more price discovery mode. So, this particular level, if we zoom back out, you can see that through bear markets it tends to be a fair amount higher, and we saw this again. It's kind of similar to the realized cap. It provides some kind of ceiling price on things, and then as we move into bull markets, we can see that it tends to actually deviate quite substantially. In this one, it was more in the late bull market. In this early phase here, this is when ASICs really started to come online. We saw a fairly substantial gap, and it really didn't return until halfway through the bear market, which is not dissimilar to what we saw in 2018. So if we do manage to close up above and really disappear away from the difficulty multiple, then there's a good chance that we may not revisit it for some time. It could be that in this early bull we actually get to see it as a test of support level, which is kind of the all-in mining sustained costs. That's kind of what this level represents. We may get a retest, but I think if we do manage to leave that from this point on, that's another signal that miners are in a profitable position, and they will be hodling more coins than selling them on the market, which again is a constraint on supply. Now, this is an interesting metric. This is a chart that was originally developed by Philip Swift, who goes by the handle Positive Crypto. He has an interesting website, so you can actually catch this golden ratio live on, I think it's called lookintobitcoin.com. Now, this is a very interesting model, so let me just zoom out on this guy, and we can kind of get an overall view. I think, yeah, here we are. So if what the golden ratio does is it takes the natural number, the natural exponent number, and it uses that to map out all of the Fibonacci and golden ratio lines. And what's really interesting about this particular metric is, in particular, the dark blue line, which is the actual golden ratio, 1.618, and what this is basically mapping out is a ratio of the annual, or the 365, the 1 year moving average. So it's basically taking all the Fibonacci ratios and the exponents above that of the 1 year moving average. And the 1 year moving average has tended to act as kind of the, it's similar to like a mean line, a very long-term mean, where it kind of carries through the, in bull markets, it's support, and it also sits, quite notably below. And then during bear markets, you get this very slow moving, and it kind of returns back as we move into the early bull market, and then away price kind of expands above. So there's kind of three phases that have been noted through history. There's the strong bull, where you really get a deviation and price exists largely above this line. You get the bear market, where the 360 or the golden ratio is far above it. And then during the early bull market, there's this transitional period where they actually resync up and kind of follow each other for some period of time, and you get a bit of resistance, a bit of support. It kind of plays around at this particular level. Now, this has occurred on two separate occasions actually in both of these market cycles. You can see again in the early bull we had a deviation away from the dark blue line. In the bear we had a price well and truly below, and then we had this shorter phase where it kind of tussled with it. It had support, a bit of resistance, and it kind of balanced around that dark blue line. And what you can see is during our particular bear market, let's now zoom in with that in mind, you can see that we had this deviation away from it. We've now broken below the golden ratio, and you can actually see that the 1 year ratio, this purple line, and the blue line have really acted as kind of a channel that captures kind of the central gravity point. So, during the deep bear, it really wants to exist below them. During early, this is, people were thinking that this was an early bull market, and we saw it kind of break up above and try to maintain. It didn't quite hold it, dropped back down to the 1 year. We had that capitulation due to coronavirus, and you can now see the price is back up above, and it's now coming up to retest this particular price level. So if I was looking for anywhere to expect some kind of pullback, this is where I kind of said before that we're talking about 14,000 as this golden ratio level. So for those traders in the rooms, that could very well be a take profit zone in the short term, to kind of see and take some money off the table, have a look and see how price kind of reacts and whether we get a strong break above. Considering that level actually aligns with kind of the peaks from the 2019 rally, and also the 61.8. This was the original 61.8 retracement level for the bear market. There was that first wick down to about 6,000, which then set the price floor of this bear market, and we had a 61.8 rally, and then we basically bounced off every fib level ever since. So this 14K level both has technical significance and call the natural numbers on chain or magic or whatever you want to call them. There is some confluence with what Bitcoin's historical behavior has been. So I would be looking at the 14,000 level from a technical analysis and a magic line perspective as some way to either take profits or keep an eye on whether we get some kind of short squeeze that actually just wants to bust price right through there. I suspect that there's still some time between now and actually attacking the all-time high. I think what's going to happen is the market's really going to test things. So whilst we're seeing a lot of new interest, and there's most definitely a lot of price action here, what I don't think the market has quite yet got is a whole influx of 2017 level attention. I think there's more people involved, and I think people are starting to come around to the notion of what Bitcoin is, but my gut feeling, and this is just kind of a sense from looking at what's going at the conversations on crypto Twitter, talking about some of the on-chain data, looking at exchange flows, things like that. My gut feel is we have new entrants, but we have new entrants who are investing $1,000, right? $2,000, something where they're just kind of willing to let it ride. I don't think we've necessarily grown our high conviction hodler base. Now that's not really a problem because you still have the buyers of last resort, right? The hodlers who will buy at all times. So but they are always accumulating, and I think this is another trigger. This is kind of, if you think about it, everyone was accumulating all through 2019. There was a lot of accumulation that went through here. This was, I think, a very large distribution cycle. People saw this rally, and a lot of us missed it. I remember us talking in the chat room where we were hoping that this thing slowed down, and it just didn't seem to want to go. We then got this redistribution phase, and I believe that a lot of people accumulated through this rally thinking, my God, if that goes again, I don't want to miss it. So I believe this was a large distribution and accumulation cycle, which was largely driven by the Plus token Ponzi riding the way up and then selling on the way down. And I saw actually the other day that the Plus token, there was 27 members of Plus token that actually just got arrested. And I believe in China, and I believe that those coins, whatever they still had, there's a very good chance that they are now lost into the abyss. So, they could be redistributed depending on how, if their assets become part of the litigation. I mean, I don't know how all that's going to play out, but that's kind of an interesting end to the story. But I think this was a distribution of all of those coins into the market, and the reason that I will stand by that is I think this sell-off in the coronavirus pandemic was largely driven by short-term holders and leverage. What we did not see during this period of time was the strong hand sell. And in fact, Coinbase and Bitstamp and a lot of the exchanges actually released papers saying that, you know what, we actually saw an influx, almost a 2x, sometimes a 4x number of new signups, and people actually bought on aggregate that dip rather than sold it. So I think that's what set the bottom here. I think this is the bottom, and I do believe that this rally here was an accumulation rally. I think that the strong hands were accumulating through here, and there's a little bit of new money coming in. I don't think that this rally, I think this rally is driven mostly by people who are already in the game and have now gained. We've seen this kind of tentative rally. You know, people, oh, maybe coronavirus will get worse, maybe the stock market will get worse. You know, everything's, where's the money going to come from? And I think this is high conviction hodlers having accumulated all of this. I mean, this is a really tight pattern. We saw volatility go to practically nothing. This rally is now commitment. And I think this is going to force people to add more to their position. And it could very well, the people who invested $1,000, $2,000 here are now in profit. They could very well be now more interested. So I don't think the momentum is going to slow down, but I don't think that we're at 2017 level yet. I think that there's inklings that we're getting there. But if I was to liken this to some previous time frame, my gut feel is somewhere around 2016, maybe mid to early, but it's still very much an insider's game at this point, which is positive. Once we break 20,000, I think that's when we start seeing some real retail entrants. A fairly similar story if we look at the Mayer multiple band. So this is taking similar Fibonacci ratios of the 200-day moving average. And you can see that our first level up here, which would be our caution level. So this is where we start thinking about maybe there's a profit potential here, which is essentially taking the 1.618. So it's kind of similar to the 200-day moving average. And you can see that this level here is about 13.9. So again, we're in that $14,000 range. And again, equivalent to the wicks of these candles here. So again, for the traders in the room, there is confluence between a number of fairly significant natural numbers, and moving averages that 14,000 is the next major resistance. And what will be really nice to see is if this thing actually just slowly creeps up. I think the slower that we go from 12,000 up to 14, the more of this kind of stable long grind we get, the more confident I will be that 14K will fall quickly. If we keep rallying very hard into 14K, I think there's a strong likelihood that we bust through and then reverse back down. And we actually saw a fairly angry candle today that sold off about $1,500, more or less got bought up, but someone certainly liquidated a large portion during that time. But that's kind of my gut feel. If we can really stair-step our way from here up into 14,000 and build some confidence in market structure rather than kind of just candling straight up, that will give me more confidence that we actually bust through 14 without too much issue. From the unrealized profit and loss perspective, so this is looking at the coins when they last moved, how much of the supply is now in profit based on when the coin last shifted. And you can see that we've just got our first string of purple, right? We're now into the phase of belief. And in some portions, I do believe that denial is most definitely in effect right now. I think denial is most definitely in effect for the Ethereum chain. I think a lot of people have been pretty taken aback by the price action that's going on with Ethereum. And I'll share my thoughts on Ethereum towards the end of this section. But I think overall this is positive. We're now moving into what I think we're now getting to the point of the end of the disbelief rally. I think people will start accepting that the fact that this is now going higher, and I think the monthly close on a technical analysis perspective is probably the most important thing that's now built that confidence. I think dips will be bought with two fists at this point in time. So I think we're onwards from here, and that's again, it's further supported by the mining behavior where they're going to be in more profit, especially as their cheap energy and stuff starts flowing in China. And just to kind of return to the cycle chart, so this is plotting out the two different cycles since the lows, and you can see us in the kind of light greeny blue here. You can see that we ran that initial check where we kind of followed the very early 2012. This was the plus token rally. We then had the distribution, which has brought us back in line. And it's actually pretty amazing how we've just basically been following this particular path. I am curious whether we start to see it really build sideways from here. I would not be opposed to a long sideways trade, which then rallies back up. I would like to actually see it extend sideways a little bit, build a really long stable base, and then start to kick up and kind of touch this level, build out a stable base, touch this level. Whether we see this reduction in peaks, I do have a suspicion that the addressable market for Bitcoin is much larger. We have this very interesting reality where the larger that the Bitcoin market gets, the more people want to get involved in it. But at the same time, the larger it gets, the more volume you need to actually maintain very high prices. So, there's a lot of talk at the moment, and I would tend to agree that what we see at the moment is on a big day, we'll see $1,000, maybe a $1,500 candle, right? There'll be a $1,500 move in a 24-hour period. We could very well get to the point where we start seeing, multiple thousand, even $10,000 candles, and it could go both way, right? The volatility will get more intense as we get towards the end of this thing. So, looking for key areas to be taking profits, but also to be buying the dip, is certainly going to be a focus of mine over the next few weeks. So I think maybe even next week, I will do a what to look for to buy the dip, right? If I assume that we have this rally upwards, I'll do a little a newsletter that looks at all the buy the dip metrics that I'll be looking at, and likewise as we get closer towards the euphoria stage, there's kind of two forms of sell the rally. One being areas that are kind of the caution zones. When do you start thinking, okay, maybe in short term I'll take some profits for the traders in the room? And then the other one is, what does the blow off top look like? So I might step through each of those over the next few weeks to help build out your toolkit as to what you should be looking for to make the most out of that. So that'll be something to stay tuned for. But I do find it very interesting that we are still following almost to the T, this particular pattern that's going on here. So I would like to see a stable base form out and really attack that golden line at 14K. I'd actually like to see a stable base get built out and take some time up at 14,000. I think that would really, really build confidence and project up for the next level. The other thing that would really build confidence is a breakthrough of 14, a consolidation, and then a retest of it, and then away it goes. They're kind of scenarios that would really give me confidence for long term. We could very well be going for all-time high if that was the case. So 14,000 is kind of the level to watch. And very similar, since market top, you can see that through all of these bear markets, so this is where the 2012 broke all-time high, and away it goes. We are pretty much following the previous rally, and this is what I'm talking about. If we happen to get this long, stable base that gets built out, this is the period of a couple of months, so not actually dissimilar to what we saw here. If we see about 3 months of base building, whether that's below the 14,000 level, and then kind of come up, test, and then really start breaking above. But there's most definitely an opportunity for, if we do build a base, that will set us up for a similar kind of size rally from that point onwards. So, this is really the bulk of the bull, and this is kind of the foundational layer that I think the longer this goes on, the more stable and the stronger the rally that comes off the back of it will be. And again, we've kind of seen, this whole thing has been one big consolidation, somewhere between 6,000 and 12,000 has kind of been the bulk of the trading ever since 2018. So this whole thing is one big triangular consolidation. Now you can see, I'll run through both charts here. This is Bitcoin active addresses. It's a fairly benign and simple metric. The more active addresses, the more people you can expect coming in on board. Now, granted, it's not a perfect metric. It's never one-to-one, but we're certainly seeing on a log trend, we're seeing a correlation. We've always seen a correlation between active addresses and price. One thing to be aware of is that we're seeing fewer and fewer coins actually moving. And we actually saw the other day that during this particular rally, the number of coin days destroyed has been very, very low. So during previous rallies, what we see is older coins actually move to sell into strength. So what a coin day is, if you buy 1 Bitcoin and you hold it in a wallet for 1 day, that accumulates 1 Bitcoin day. If you hold it for 2 days, that holds 2 Bitcoin days. And likewise, if you have 2 Bitcoins and you hold it for 1 day, that accumulates 2 Bitcoin days. And what the Bitcoin days destroyed is indicating is how many days, Bitcoin days, have been destroyed during a particular period of time. And what we saw during this particular rally is very, very little destruction. And that's the opposite of what we're seeing through all of these rallies. We've seen a lot of coin days being destroyed, which means that it was basically sell the rally, more or less. People bought at some point earlier and they've now sold into that rally. We are not seeing coin days being destroyed in this particular rally. We are seeing active addresses increasing, and that to me indicates new people, because the old holders are not moving their coins. These active addresses are actually being used by new people coming on board. And if we actually flick over to the number 2 coin, Ethereum, very, very similar. This level of active address, you can see the correlation is very strong between active addresses and price, and they're more or less following one and the same. And considering Ethereum is an account-based model, we don't really map coin days onto it, but we can, as an equivalent, if you've got a new address, because it's account-based, it is closer to a one-to-one. Obviously, people can have multiple addresses, but in this instance, this is actually new people coming on board. And this is actually quite an important metric. There's no denying that the Ethereum space at the moment is gaining a lot of attention. And I think that overall, between those 2 coins, Bitcoin and Ethereum, they're going to capture a very substantial portion of market momentum in this cycle. And that's really what the blue chips are for, right? They are to be the more confident, more solid buy and hold type plays. Now, what is interesting is from the sense of exchanges, ever since the March sell-off, we have, so this is the balance on exchanges, we have only seen a downtrend in Bitcoins held on exchange. This is remarkable. This is, and look how linear it is. This is more or less people. If we look at this bear market here, you can see an acceleration as the bear market kicked in. These are old holders that are selling into strength. We see the uptick in the realized price as old sellers move their old coins. They destroy lots of old coin days, and the exchange balance has more or less grown all throughout. And we've seen this slow reduction in the amount of coins going on exchange, and then this is a very, very distinct accumulation period. And this supports pretty much what I was saying before, that this whole zone has been this was a distribution. There's coins coming into the exchange, but we know that Plus Token was distributing a very large portion, something like 1-2% of the supply. But we're not seeing a massive increase like we did during this phase here. So this indicates that whatever Plus Token and others were selling into this rally was being more or less accumulated. We've got this horizontal plateau. So to me, that's a distribution phase, and this here is most definitely strong accumulation that we've not seen in a very, very long time. In fact, we've not seen it since back down here in 2016, which is why I say that it's kind of fairly similar. And look, it could very well be that when we start to see an uptick in this, it actually means we're moving into the second phase of the bull market, because more people are then starting to take profits. That unrealized profit and loss chart will start to be increasingly in profit. So when we start to see an uptick in exchange balances, that could very well perhaps signal that we're at the start of the euphoria bull market, the 2017 really, really strong move upwards. Where the people who don't quite have the conviction are happy with their 30, 50, 100% profits. And ideally, this is us, the high conviction end of things, trying to capture the bulk of the move. So this could very well be something to be keeping an eye on when we start to get a curling up alongside strong price action. Now, for Ethereum, we've actually seen somewhat of the opposite, which is interesting, and I can't say I quite understand the mechanism behind this. Similar to the bear market, we see that we get an increase in exchange balance. To me, that makes sense. What's interesting, we're starting to plateau, and there is more being withdrawn at the moment. Now, this is actually quite interesting. Let's just zoom into the bear market beyond. We've seen more or less coins going onto the exchange. Now, you can see that we've got somewhat of a plateau during this accumulation phase. My gut feeling is that most of this leg up was actually Bitcoin accumulation. And, people are basically seeing this sell-off and they're accumulating Bitcoin first. That's my gut feel about this. Now, during this kind of later phase, when we see this significant reduction, this is kind of more of the DeFi accumulation, in my opinion. This is where people are starting to actually become bullish on ETH itself as an asset. And if we see this really start to continue and dip down, that to me is telling me that people are accumulating for DeFi, and people are accumulating for hype related to proof of stake and the Ethereum 2.0. I think if we see a real stair-stepping reduction in this, that's large holders actually removing Ethereum from exchange balances. And there's no denying that the DeFi space is really going to draw a fairly substantial amount of attention to Ethereum as a project. And I think that there is a strong bull case to actually trading that market and kind of seeing how that performs over time. So that's something to be aware of. And before we jump onto the last thing for the newsletter, let me just bring across this guy here. So I mentioned a few weeks back the DeFi perpetual swap on FTX. Now, granted, it's a fairly young product, and there's a lot that kind of goes into it. We have to kind of see how it pans out, and there's obviously a basket of various DeFi tokens, and the longer this goes on, the more of this price action we will have. But if I just hide this guy for a second, so this is the DeFi perpetual swap in US dollars, and you can see that there's clearly an uptrend, and granted it started down here at practically nothing, and as the thing gets repriced, so as more price action comes in, this will smooth out, but there's clearly an uptrend at play here, at least on a daily basis. Now the chart that we're seeing here is actually the DeFi perpetual swap priced in Ethereum. So what's going to be very interesting, the same way that Litecoin or Dogecoin or Decred or any of these other strong and old altcoins tend to oscillate in BTC terms, tend to oscillate around Bitcoin, I would not be surprised if we don't start getting some oscillation patterns going with this DeFi perpetual swap. So it may take some time to build up enough price action, but I would certainly be starting to keep an eye on this DeFi perpetual swap and just thinking about it as some kind of oscillator. And for example, now that we've had a rally in the Ethereum price, it would not surprise me, now that we're kind of at this low point, for traders to start saying maybe this is actually a time to cycle some of those Ethereum profits back into DeFi products. And we could very well see a rally from this point on, and then we start getting this cyclical back and forward. It's like a mini alt season inside the Ethereum space. I would not be surprised to see that. Again, we need more data to really confirm this. It's easy to point at this and say yes, the thing's going to cycle, but there is a potential that we see that on a micro scale. It's worthwhile keeping an eye on this, pricing the DeFi perpetual swap in Ethereum by sticking it in the denominator. It's worth keeping an eye on this because it could very well be an opportunity for trading in that sense. So the last thing that I wanted to touch on is the Google search trends over time. I've seen a few people sharing this online, and it's fairly relevant. Let's grab this guy here and go worldwide, and let's look at the past 5 years. And I mean, immediately you can see there's the Ethereum price chart, right? It's fairly indicative, and you can see here that we're now breaking north again. Now we've seen this occur once before. This was during 2019, so this is kind of that when Bitcoin was up at I think it would have been about 14 or 12k during this time. So it's kind of that early blow off. And we're starting to see it again. And considering the exchange balances we just looked at, the active addresses, kind of the confluence of all of the strong hand, there is more people coming on board. To me, this is positive. This is what you want to see. And, as you can see, there is distinctly a correlation between price and attention. And I think those two things are going to go hand in hand. And let's add in there Bitcoin just to kind of get a relative perspective here. And you can see that the attention for Bitcoin remains the highest. So this here really demonstrates the dominant perspective of Bitcoin. You can see that search terms globally is substantially higher for BTC than Ethereum. Now, clearly this is an opportunity, right? There's a lot going on the Ethereum space, both good and bad, but there is a lot happening, and it will attract more attention. And I think that if this DeFi movement can avoid implosion, which I don't necessarily think is entirely plausible. I think there will be an implosion at some point in time, But the longer that it staves it off, the more people will become excited and come on board. Now, I do think there is a risk at the moment because the fees are clearly a detractor. I think there is an opportunity for other projects to try and pitch themselves as, the cheaper version of Ethereum, but ultimately they're all going to come up against the same plays. If there was two projects that I think, by no real merit other than the fact that they have hype machines behind them, I think that Cardano and Tezos are probably the two smart contract platforms that are the most likely to attract any form of attention. Cardano is obviously coming out. I think they just launched their staking service. Shelley, which was supposed to be released in 2018, has come out in 2020. So, stay tuned for 2050 when they release the next update. And Tezos is kind of the, if I was to put an analogy to it, it's kind of the Decred to Ethereum, where it's opted for the on-chain governance perspective. But I think most importantly, they've got $100 million capitalized foundation behind them, who has a lot of money to throw around and pay whoever they need to build whatever they want and hype whatever they need. So I think between those two projects, they're probably the most likely to capture the quote-unquote ETH killer narrative. The fee model is really the only thing that's going to drive that. I know Ethereum is in 18 months' time or thereabouts going to try and roll out EIP 1559, which is supposed to start burning some of that ETH as part of the fee market. I'm not entirely convinced that's a good idea. I think it's good for scarcity. I think it's horrible for the platform because anybody who's paying fees, we already know that the Bitcoin fees are going to get very high, and they're already starting to get very high actually. I think I saw $4 or $5 transaction fees just to get in the next block at the moment, and 1 week until a 1 sat per byte gets transferred. There's a very good chance that the fee markets are going to become very expensive very quickly. If ETH is being burnt at the same time and the scalability can't be achieved, then the price of ETH will go up. So swing trade, thumbs up, that's great. Scarcity, thumbs up, that's great. But if you can't use DeFi because it costs you $25 to do even an ETH send, very quickly scalability is going to become a serious problem. And I think the reality is that Ethereum and in all of these smart contract chains, if I'm going to put forward a prediction for what I think will happen during this cycle, I believe that the market will establish and work out that you just cannot put data on chain. Now, we all know this in the back of our minds. I'm increasingly convinced that none of the realities of this technology matter. What matters is price and hype. So for the traders in the room, this is going to be an excellent bull market for actually capturing those gains. And you may see me in the chat room saying at the moment, particularly related to DeFi and stuff like this, trade it, don't trust it, because I do believe that the realities of scalability on a distributed network are unlikely to be solved anytime soon. And I think Ethereum 2.0 is a lot further away than people want to believe. And when I say 2.0, I mean the finished product with smart contracts. There will be hype as they move into phase 0, where they start moving, you can start staking your ETH. I believe it's a one-way bridge, so certainly don't cross that bridge without some pretty significant conviction. I know I certainly wouldn't be even remotely interested in any kind of percentage return in order to achieve, I think the risk of locking up that much money for that period of time. I think a sell the news move is probably a safer bet. But I think that the realities of scaling and fees are going to kick in. Now, it works for Bitcoin because it is well designed as a store of value. People are more than happy to pay $5, $10, $15 to move 25 grand around. I think people will be much less inclined to pay a $50 transaction fee in order to move $25 worth of Ethereum. So, and that's kind of the use case that they're trying to go for is, maximum people on chain, do everything you want, be a bank account. I just don't think it's possible on a distributed ledger. So just keep those realities in mind. But then there could be opportunities for both that DeFi oscillator. There could be opportunities for, ETH killers. And if I was to kind of put one more thing on people's radar, it would be that the Zcash and Horizon, both of which have their halving coming up in November, I believe that there will be a swing trade opportunity for those as well. So they are two coins that will be experiencing a halving in November. Again, I think there's an opportunity for a sell the rally or sell the news perspective. I still have fairly low conviction with Zcash. Nevertheless, I think that over the longer term, I think that there's, just by hearing a lot of the rumblings, there's lots of smart people, kind of the talking heads in the room. The Ryan Selkis of Masari is one of them, who is fairly high conviction. I think he holds BTC, ETH, and Zcash, and that's it. So I think Zcash will get attention during this market. I think there's been a lot of people talking about Zcash and Monero. They tend to kind of one-up each other. Monero obviously being the older coin, but I think Zcash has positioned itself, whether you believe in this or not, as a compliant privacy coin, which to me, is kind of against the whole notion of privacy. But they obviously have more exchange infrastructure than Monero, because Monero tends to stick to its cypherpunk roots. So I think that that's something to watch, is that exchange infrastructure, liquidity, and the backing of various exchanges goes a long way in this market. And one more thing that's pretty exciting, and then I'll close out, is Monero's actually, they've been researching atomic swaps, and their research team has just come out and said, we believe that we have a solution to getting atomic swaps into Monero. And to me, this is really exciting. And what I'm really looking forward to is trying to get the Decred community to actually put forward some funding to help build out Monero atomic swaps, and then bring that onto the Decred DEX. I think that will be a positive for the entire ecosystem, and I think that it's a good attention grabber for Decred to actually fund some of this public infrastructure. So that's it. I know that was a bit of a long one, but hopefully there was some insights there. I think that we are in a bull market. I think that it's an opportunity now to be buying the dip. I'll be trying to pull together some classes over the next few weeks in these newsletters to try and buy the dip and sell the rally. So just some tools for your toolbox. I think the exchange movements, I think the Google Trends, the active addresses, all of these things are pointing to new people entering the space tentatively, but the strong hands are pushing this thing forward. So I think that the foundation is set. I don't think we're going to all-time lows anytime soon. So that's kind of my core conviction. And there's obviously a few fundamental trade plays in there to buy the rally, sell the news kind of thing with Zcash, Zen, and maybe Monero as things evolve from there. So that's what's coming in the pipeline. And again, as always, just grab me on Discord if you've got any questions or thoughts. Cheers.